So we have today starting off, Topp, do you want to tell us a little bit about yourself, where you're coming from, and how you keep busy on a day-to-day basis?
Sure. Sawadee-kap. Hello, everyone. Pleasure to meet you all. My name is Topp from Thailand. I've been in this space for 10 years now. I was one of the first founder of a crypto exchange back in 2013 called coins.co.th. And we sold that to Gojek, which is the Uber of Asia 4 years later. And now I'm the founder and group CEO of Bitkub. It's been 6 years now in my second venture. And we became the largest fully regulated cryptocurrency exchange in the ASEAN region. And we have only been Thailand focused. We have no other presence. And what is unique about Bitkub is that we chose to be compliant from day one. And we don't spread ourselves thin by operating in multiple markets from day one. But we managed to get to the point that I think in December 2021, our authentic volume reached top 9 on the world's ranking. And we managed to get 7% of all the Thai's population to own crypto.
Wow, 7% adoption. And this is as of 2023 or as of?
As of the previous peak. So the 21. So
okay,
I think we have even more adoption today.
Yeah, absolutely. There's some jurisdictions still quite low in the percentage. That's quite impressive. Thank you. It's so nice to have you with us. Yes. Rachel, would you like to go next?
Sure. Lovely to speak to you all today. I'm Rachel, PR from Bitget. Bitget is a 5-year-old exchange started in 2018. And we are now currently top 5 in derivatives trading volume. And our focus is at copy trading and derivatives. Recently, we've been launching a lot of AI trading bots and a lot of a suite of trading tools that helps our trader to trade smarter. And also, we are at Davos here launching a blockchain for her project. Our mission now is to create a more equitable future driven by crypto revolution. And we've been working on quite a few CSR initiatives, including the Blockchain for Her program. And we also pledged $10 million to invest in the next 5 years into blockchain for youth projects, which we already made some partnerships with university worldwide to develop blockchain education courses. So I'm looking forward to share with you more on how we see about the future of centralized exchange.
Rachel, that is really impressive. I think that actually deserves a round of applause. I mean, I think I'd love to hear more about that. We're definitely going to dive deep on that later on. Dorian, would you like to go next?
Well, thanks for the invitation. Happy to be here with you all. So, my name is Dorian. I work for KuCoin as Europe BD lead. And at KuCoin, well, to keep it short, in one sentence, what we do is when we are one of the largest exchanges worldwide at the moment, we focus on listing altcoins early to try to get the max opportunity out of these crypto gems for users. We really try to do a dedicated work to find the safe, consistent, durable assets that you want to invest in and see some large times 10, times 100 over the long run. And to be early there, as we all want to be. And we all think we are early in crypto, but when you look at other people around you, you are not always as early as you want to be. That's kind of our job, for you to be able to be as early as you can be.
Great, thank you. And last but not least, I didn't want to skip over Carlo here, but he has been very kind and generous to replace somebody on very short notice. And I thought you maybe did it on purpose to keep us hanging at the last minute and show up 2 minutes before the panel. So we're so glad you could make it. I wanted to give you a moment to catch your breath. So please, if you would like to tell us a bit about yourself.
Okay, my name is Carlos Salinas. I come from Andorra. I'm the head of digital assets for a traditional bank, MoraBanc. Basically, it's a family-owned bank, private bank. It's been it's been run now by the 4th generation of the same family. So as you can imagine, very traditional environment. And basically, I'm in charge of the digital asset strategy of the bank, which is basically just to see what's the place of a traditional bank within, digital asset space. And basically what we've noticed, or what we've realized, is that basically it is not, digital assets are not very different from any other type of assets. At the end of the day, we're talking about the same. What is totally different is basically the handling of it. And that's why I believe, traditional banks are missing a huge opportunity here, because the hard work, we already have it. We have compliance departments, we have legal departments, we have resources, we are regulated, we know how to talk to regulators. At the end of the day, when you analyze it like that, the tough piece is already done in our side. We only need to implement the technology and to open our minds and to understand this new technology, this new type of clients, this new type of businesses. And that's basically what I explained to my board, and that's why they gave me the job. I've been involved in digital assets very short time in the last couple of years. Before, I've always been the risk manager of different institutions. My specialty, my education, and all my career has been on risk. So it's been like a transition into this new environment, which has basically made me unlearn many things and learn new things, especially talking with guys like yourselves and participating in conferences like this one. And I think, that basically centralized exchanges, of course, they have a place. They have to make, catch up is going to be tough, because, the DCPs, in quote, easy. You already have it. You have, fantastic products, fantastic interface. User experience is fantastic. But, regulation is going to make your life tougher. It's going to make your life more difficult. And just be ready for it. Whereas we banks, when we are doing catch-up, we are not that far, most of us. And that's basically what we're doing right now.
I think a lot of people who have been in this space for quite some time resonate with what you're going through, of having to pass along the gospel to people who are just not maybe ready to receive the information. And so at least you're among friends here.
Thank you.
Okay, so the format is really open. I'm just going to address questions, and feel free to mix it up. Topp, I'd like to start with you. You have a lot of experience in the regulated space. As you said, you guys chose the regulated first approach from the get-go. How do you feel that approach of putting regulations at the forefront has helped you in attracting institutional adoption? And how have the needs of institutional clients evolved over time?
Sure. First of all, I would like to highlight one thing about Thailand. We are a country that has a proper regulation on digital assets for 6 years now. And Bitkub has a proper, what we call a digital asset exchange license devoted to this activity in particular. If you look at the likes of Coinbase or other regulated exchanges elsewhere, they don't have a proper digital asset exchange license. They have a payment license, they have an e-wallet license, they may have a remittance license, and they claim to be, regulated. But in Thailand, in particular, we have a proper regulation devoted to this particular industry, and we were the first to receive the license, and we have been licensed to operate for 6 years now. And I think we made the right choice, because doing an exchange, people thought that you're running a startup. You can move fast, you can break things, but not really, not in the money market, right? When you found a startup that sells a T-shirt online, you can afford to lose a T-shirt. What could go wrong, right? What's the maximum cost of losing a T-shirt online, selling a T-shirt online? But when you have billions of dollars of customers' deposits with you, you should never cut corners in the money business. So we chose that philosophy from day one. We decided to go a bit slower, be compliant, and make sure that we managed to balance the demand of different stakeholders from day one to reap the long-term benefit, long-term profitability for our group. And as you see in the previous 2 or 3 days, you see clearly that before that, there were 2 strategies. You either move fast, break things, and then apologize later.
Which we've heard before from some of the people who are no longer
here.
Here with us today.
So their $1 quality is very different from our $1 quality, right? We can sleep well at night. We have a stable $1, right? We have a legitimate $1 revenue versus their $1. They can't really sleep well, and there's a chain reaction to the usability of that $1. The whole chain is going to get in trouble soon. They're leaving the scar tissues, right? They're not running a stable business. And as you see clearly in the past 2 years, everybody is moving towards our direction. And we made the right choice. And the word trust, you can't really buy that with money. It takes time. It takes integrity. Long history of consistent performance and constant communication. Sometimes you even have to over-communicate. So I think this is, our advantage, that we decided to grow a bit slower, but our business is very stable and the infrastructure is really strong. We got to the point that we became the CII of Thailand. CII stands for Country's Critical Information Infrastructure. Right? We have $3 billion of customers' deposits with us, which for Thailand, this is considered big. Right? We are a country of 70 million people. Right? So a CII means that if anything happens to Bitkub, there could be a systematic risk to the Thai economy. Right? So we are the same category as a bank, as a stock exchange, as a tollway, it's like an infrastructure now, right, for everybody. And we have to meet even extra scrutiny and requirements on top. For example, 1/3 of our board members have to be independent. Right? We have to have very good CG, corporate governance, Big 5 auditing firm. We have to decentralize our decision making into committees, subcommittees, and we have to do daily reports. For other exchanges, that it may seem like an onerous task for them to, for example, do things like proof of reserve. For us, this is our bread and butter. We've been doing this for 6 years now, right? And my point is, the knowledge and the expertise of running an unregulated exchange is very different from running a proper regulated exchange, right? Exchanges, and the devils is in the details. But what we see is only on the surface, that they all look the same. But what differentiates us is really what's underneath the iceberg, right? And I think we chose the right strategy, and and as you see, everybody is moving in, and I think the real money is not retail. Everywhere, the real money is institution, right? And institution cannot invest in scar tissues, or illegal, gray area, right? So we're not looking for short-term, quick money here. We're looking for big, real, serious money, long-term performance as a group.
Understood.
I would go on actually from where you left it. You're completely right. There is a general move towards regulation. I mean, regulation institutions, traditional institutions are joining us as well. There is kind of a convergence there, and that's because there is new institutional need. You mentioned it in your question. The way it evolved recently, institutions are there, and because of that, there is a need for liquidity that there was not in previous cycles, because there were liquidity demands that could be managed for retail, that could be managed even for smaller platforms, etc. With the new institutions that we have right now trading, they will need, and they are already needing, liquidity levels that can mostly be provided only by large actors, large players in the industry. And therefore, like from a macroeconomics perspective, we could expect some kind of aggregation to take place on the medium to long run. Probably because once they start trading, in some place, then the liquidity is there. And the more liquidity there is, the more it attracts other institutions to join. Then you get network effects. And because of that, you will tend to have some kind of aggregation. So regarding that, if you look at, for example, the needs of these institutions, how they evolved recently, you would have, for example, the need to be as flexible as possible, to have as minimum, as low amount of liquidity to be locked on the exchange as possible, since the Black Swan events that we saw in 2023, 2022. So since then, we had to adapt. For example, on KuCoin, we offer services for loans for institutions, and it allows them to, have, without withdrawal limits, to have these loans based on their total locked value, and to remain as liquid, as flexible as possible. And I think flexibility is going to be one of the key elements to integrate institutions to our world.
That's great. That actually is one of the questions that I wanted to address to you is, what are we seeing with centralized exchanges in terms of innovation? Where's the market evolving? What are some of the new products and services that you feel that you've had to introduce to really capture that market? So I think that is a good summary. Rachel, you want to expand?
I think I can add some experience at Bitget. We are also trying to be as compliant as possible from the start. However, because
girl.
Yeah,
it's my thing.
because we're like a global exchange, and a lot of countries actually, their regulatory framework are constantly evolving. Like sometimes, you hear some countries, they are very open to crypto, and then after a few years they might tighten it. So yeah, that's the difficulty I think in terms of centralized exchange is facing in terms of being super compliant, and we at Bitget to compromise the changes. We try to be super transparent, and we send out transparent reports every quarter, try to let our community know as much information as possible within the company, and we reveal everything, as well as we maintain, proof of reserve is the industry standard right now, and we double it. We try to maintain as close to 200% as possible, as well as we have a protection fund, which now value at 400 something million, because it changes every day. We put Bitcoin and USDT and also Ethereum in it, and with public wallet that everyone can see, so they can check 24/7. Is it still there? Yes, we're not gonna move it. So that's the measures that we're trying to do right now. As well as working with different AML providers, such as Chainalysis, and try to evolve our the process to stick to the standard as much as possible.
Mm-hmm. So, Carlo, you spoke a little bit about the challenges of bringing the digital asset space to your environment. Centralized exchanges that are regulated, that bring trust to the market, especially for institutional players, play a central role in developing a thriving ecosystem. How are you looking at some of the key factors about creating an ecosystem, creating a regulatory framework around adoption in your environment to move the needle forward?
Yeah, thing is, for us, it was really important. Basically, it's basic to have a clear regulatory backdrop in order to basically to be able to build and to basically to offer businesses. We basically, like in Thailand, in Andorra, we have a regulation about digital assets, which was enacted like a couple of years ago. It's very similar to MiCA, to what MiCA will be, and that together with basically client demand, basically that's what it made us to basically to jump into the space. Whereas, you know, let's say working and living and basically and progressing together with centralized exchanges and traditional financial entities, there is one key area and key risk point that we need to basically solve, which is the counterparty risk. We've seen it. You know what happens when you don't take care of counterparty risk is that basically that your money disappears, and basically that cannot happen on the traditional world. Even it cannot happen. You know, it's possible it could happen, but it cannot happen. So for me, we need to build a framework like the one, and basically we're not inventing anything, okay? For instance, I don't know if you know, for those of you that work in banking, what I'm gonna say probably will resonate, for others may not. But for instance, in banks, basically we do not trust each other at all, okay? We have, you know, very strict risk policies on exposure on any counterparty relationship, any trading relationship, and most of these relationships are all fully collateralized. Okay, for instance, if you look at the space of derivatives, okay, OTC derivatives, there is, you know, a whole body of regulation and organization. It's called ISDA. There are standard contracts to basically to trade derivatives, OTC derivatives between different counterparties. And there is also a document, it's called CSA, which is Credit Supplement Annex, that regulates basically what's the amount of risk we can have with each other at a given time. And that normally nets to zero every night. So without this, let's say, with these systems in place, it's going to be very difficult, or that's the way I see it. It's going to be very difficult, this collaboration between traditional finance, banks, and centralized exchanges. Unless we have this mechanism in which we can, first of all, net off the counterparty risk between us, it's going to be very difficult to collaborate. Yeah. Maybe smaller banks, maybe asset managers, maybe, but you know, with the big players, they would rather do it themselves than basically run a credit risk with any of the centralized exchanges. Because also, in order to basically to have business with a bank, most of the counterparties need to be also rated. So you need to have a rating by S&P, by Fitch, by Moody's, that basically tells the market what's your credit standing. Without that certification, most of the risk policies are already, you know, actually in place in most of the banks. Basically, it's not, you know, we cannot even talk to each other if you're not on this. Let's say you don't have this type of certification by these third-party companies, okay? Basically the certification, the rating certification is a yearly process. It's very cumbersome. It's very complicated. Banks have dedicated teams to basically to deal with the rating agencies because you need to feed them with a lot of information every year. That's basically what is giving us, you know, what's your credit standing here. It's not foolproof because we saw on the 2008 crisis, Lehman Brothers was AAA and disappeared from one day to the next. But, you know, things have evolved. And that's also, that's still, you know, a very credible and a very widely used measure of credit risk in the markets. So that's...
So I just have maybe an additional question. I'm sorry if I take the discussion into additional questions, but the thing is that, yes, the way we could work together is right now there are obstacles, and they are not in terms of tools, because actually in terms of derivative tools, the ones that institutionals are looking for, they can find on centralized exchanges, they can find on our platform, but it's really about risk management then.
Of course.
And would you say that it's more localized? Because we have seen some, let's say, new tech-oriented banks that were still like very regulated, state-of-the-art in the US, working closer with, I wouldn't go as far as saying centralized exchanges, but sometimes companies that have direct investments in centralized exchanges.
No, of course. For instance, what I'm building in MoraBanc is initially custody. Okay, custody, access to market to traditional clients that have never have any exposure to digital assets. We are also launching a fund, and in order to do that, I need to access the market. Okay, so basically, what I'm building relationship with is liquidity providers. And why liquidity providers? Because for once, I don't need to pre-fund my account with the liquidity provider. So basically, I'm just switching the risk. Okay, I am a bank. I'm not going to run a Binance or Bitget or KuCoin risk. So if you want to do business with me, you need to run my risk, unless we have some kind of mechanism to net this risk off. Okay, so that's just basically real time what I'm doing. Okay, so
it's not going to happen in Europe. We're not going to see in Europe what we have seen, for example, in the US with banks going this kind.
Well, you need to basically, first of all, we will need to see what are the contracts behind these relationships and who's holding the risk of whom. That's very important to understand. When I basically open a line with another bank to trade derivatives, I sign a standard contract, which is the ISDA CSA framework, and we all know, and that's let's say an international standard of working. Okay, once I sign and you guys can do that because, for instance, ISDA has included digital assets wording into it. Actually, one of the products that has been quite successful for us in the last year has been the structured products. We've launched structured products with underlying Bitcoin, okay? And we've closed those deals, basically the OTC, the back-to-back deal trade. We've closed it with investment banks in London using the traditional ISDA CSA framework, because the ISDA CSA framework already includes digital assets wording. So I can do that trade, and it just sits very, very nicely with all my mechanism, with all my structure. My back office knows what to do. My accounting knows what to do. My risk department knows what to do. It just fits quite nicely. It's just we're including a new asset class on the relationship. So basically, one step I would recommend for centralized exchanges, if you want to come closer to the traditional finance, is go out, speak to ISDA, and get approved or get inside this CSA organization as an eligible counterparty, and then it'll be much easier for you to offer, for instance, institutional derivative trading to a financial counterparty, traditional financial counterparty. Because if you do that, you are signing the same contract as I'm signing with Morgan Stanley or JP Morgan or whoever. You see? And in order to do that, you will have to have all the processes in place to basically to net off collateral, to all the limits and minimum transfers amounts and all that, which normally sits at zero. Because I don't know if you know, one of the things that brought Lehman down was basically that they didn't basically mark to market the derivatives positions on a timely basis. It was like done once a month or something like that. So now it's done daily because of the Lehman Brothers scandal or crash or whatever. So yeah, that one of my recommendations would be something like that. It's like just come to the traditional standards and frameworks that are already in place to make this transition much quicker.
Thank you, Carlo. That's very interesting insights coming from the other side of the coin. Yeah, absolutely. Topp, can you maybe talk to us a little bit about how you are managing all the innovation that's happening in the AI space? Are you looking at ways to leverage that? Are you thinking about new technologies in terms of an advantage that you can incorporate and exploit, or where's your direction going in terms of adopting AI and other forms of new technology?
Sure. Last year was the year of playing around with AI. Everybody around the world. I think this year going forward is the year of actual productivity gain, right? Actual implementation. I think the future of jobs would be very different with the arrival of AI. AI is pretty much democratizing all the technical abilities, right? And I think we have to separate between two words here: automation versus augmentation. And if you are to break down or redefine what a job is it's like a cluster of different tasks, right? And some tasks can be automated, but then some other tasks can not yet be automated, right? So I think part of the job would be automated via AI, but then we can recluster the rest that are not automated and create a new profession out of it, right? Going forward. And by adopting AI, I think with the automation, it's going to be harder in reality, because if you're going to go to your employees and say, "I'm replacing you with AI," they're not going to be happy, and they're going to be like strong resistance coming. But if you choose the word augmentation, like, I'm going to make your job easier, your customers that you're dealing with every day is going to be happier by using these AI tools, right? They're going to be more welcoming to embracing this AI technology. So I think for Bitkub, we actually created another company under our group. And I think our strategy is not going to, or the way we communicate, right? We're not going to use the word automation. Otherwise, the real adoption is not going to be very fast, because there'll be strong resistance. We're going to go via the word augmentation route more. And I'm sure there'll be new jobs created, because some jobs, obviously, when we have AI tools available and we've done all the AI training, then parts of the job would be automated. Then we have to recluster the other rest of the skills to create a new profession out of it. Or it'd be, I think it's going to be the first time that we really unlock like huge productivity gain, since the internet era, with the upcoming AI potential.
Exciting times ahead. Yeah, thank you for that great insight. I love the way you framed that. Yeah, absolutely.
Could add on top, like AI, I think there are two things that you should all be aware of as a user, a crypto investor, and maybe a user for centralized exchanges, platforms. AI is a narrative first, and we are pretty sure that it will be part of the narratives that will drive projects and make them be extremely well valued in the next cycle, which we don't know when it will be, obviously. But so AI is already that. And at the same time, it's what we do with these components, as you said, and create these kinds of products for our users first. Like, for example, I know that automated trading is a thing now, and we have been adding also at KuCoin self-learning algorithm in spot grid and futures grid. So that's something that is already available for users. And we are also trying to improve customer experience with customer support. That's one of the main components as well, with the generative AIs that we have been using for a year now. I think ChatGPT has been out for almost a year. And yeah, these are part of the products that you can already see that are available. Others are being developed at the moment. Obviously, I don't think we are going to tell each other today everything that is going to get out during next year. But yeah, as a user, like, remain aware that AI is both a narrative that you can take advantage of and new tools that you can use on platforms.
Understanding that you can't divulge all your secrets, Rachel, can you maybe nevertheless tell us a little bit more about what you touched on earlier, specifically? Are there any new products and services that you guys are focusing on to really distinguish yourself in the eyes of institutional adopters, that help them make the decision to sort of
Rather than institution, at Bitget, we more focus on retail nowadays. And the institution part, we leave it to some of our external partners like Fireblocks and the really safe ones to handle. And right now, we have a huge trend we can see in the industry that is like the DeFi demand on centralized exchange. So actually, we have launched a self-custody wallet, which means that like even though you don't have your seed phrase, but we are not being the custodial of your tokens, meaning you get best of both worlds actually, because I would think CeFi actually derived from DeFi, because when we started on Bitcoin trading before the centralized exchange era, we actually just trade P2P. But I think it's the market demanded we have a place for all the functionalities, AMM, and all the trading tools, and also people lost their seed phrase and lost their hardware wallet. A lot of things happened to it. So I would say like CeFi is still like very much demanded, but how can we add on some DeFi functionalities on our platform? So we're working really hard with doing these and also including a DeFi aggregator on our platform. We are actually the top 10 trading volume of our DeFi aggregator on Tron. So we bring the top 10 volume on Tron actually, and yeah. So I would say the industry will be going forward, merging from CeFi to DeFi.
Interesting. Anybody want to add to that?
Yeah, we can add that overall, I think the general trend, you're right in saying that there is hybridation, and now there is place for much more hybrid solutions than there were before. Like we're probably going to still have pure players on both ends, pure DeFi, pure CeFi. This is still going to exist. But now we are seeing that we can integrate products in both ways, and new equilibriums are being found actually. So you have like, you can be self-custodying, but still using the centralized exchange seamlessly from the platform to trade your derivatives, trade your spot, then get it back under your custody instantly, immediately. This is one of the aspects of hybridation. We are also looking at third-party custodians that we could use, looking at institutions because they want, once again, this risk management. And this is something that we are trying to implement as fast as possible, but it's very costly in terms of infrastructure. So you have to be sure that the institutions that you want to target are actually into that. And even for your retail users, you want to be sure that what you're offering is what they want in terms of risk management themselves, and also continue to keep the security level as high as possible, but at the same time as user-friendly as possible. Because there is always this balance to maintain between being super safe, super secure, but then nobody can use your platform, and so.
Great points.
Yeah.
I would like to, sorry, go ahead. I would like to add to that on the CeFi DeFi relationship. In order to scale digital assets, or in order to achieve mass adoption, we need to humanize the whole thing. Right? I think the keyword is humanization. Think of Skype today. Right? Everybody is using Skype, using Zoom, without knowing that the actual TCP/IP protocol is running behind on the back end. Right? They just know to use this app to get a phone call across without costing any money, right? In a frictionless, instant manner. And I think there'll be a new relationship between CeFi and DeFi in what we call a permissioned DeFi. Right? How do I explain this? The best way to explain this is to use an analogy. Let's pick the application store, right? We have iOS, we have Android, right? Those are the regulated, front-end customer-facing part. but then it allows innovation to happen within the application store within itself, right? A guy can think of Uber and create an app, on an iOS store. Can think of a way to send money across. Can order food. Can order a taxi on the phone now. And Steve Jobs, he never invented those things. He just invented the application store in a permissioned way. But he allows innovation to happen in a decentralized way. So if we were to apply that analogy to CeFi, DeFi, with the word humanization and mass adoption bundled together, I foresee that in the future, imagine if you go to your traditional bank app, which is a CeFi, and all the traditional banks are entering our space, right? Or if you go to a centralized exchange app or a traditional bank app, you press the button to borrow money. You can borrow money instantly, but not at 6%. You can get at a fraction of a cost now without knowing what DeFi protocol is running on the back end, right? Because the bank already, humanized it. But the bank is not the inventor of this loan feature on the in-app function, right? Or if you press this button, another button to send money across, right? Customers do not need to know that they're using, Ripple protocol, Bitcoin protocol, or whatever other transactional protocol to get money across. They just realize that, money arrived instantly, globally, in a frictionless manner because the bank already humanized one of the DeFi that, they chose on the app to add into that in-app feature. And everyone allows to innovate in an open system. And if there are bad protocol or bad application, the centralized player can take it off. Just like what Apple did or what Google did for the bad Uber or the bad, Airbnb, right? So I think this is the new relationship I foresee that this industry is heading to bridge or to the balanced demand of different stakeholders to make sure that we can really scale, digital currency towards mass adoption.
That's a great analogy. You wanted to add something?
Well, yeah, in terms of, DeFi, I still see, traditional institutions quite far from it. Maybe second phase of the conversation will go that way. But I foresee that it won't happen unless, there's some kind of permission, KYC permission type of access network or whatever into those pools, protocols, or any other service that may come. Without that first layer of identification, it's going to be very difficult for traditional institutions to really innovate within the DeFi space. And it's a bit of counterintuitive, right? Because DeFi is really meant to be decentralized finance. But if you start adding the layers that a traditional finance institution needs for it to work, it just kind of becomes centralized again. Mm-hmm. So, we need to find the equilibrium. I don't think we're still there in terms of basically how DeFi can really work on a traditional finance space, not just centralized, but the traditional finance space.
Well, coming from the KYC compliance space, I am seeing a lot of great innovation in terms of decentralized ID. We do have an association here in Switzerland that's focused exclusively on establishing standards for decentralized ID, and to help build this walled perimeter of the DeFi space, where CeFi, or not necessarily CeFi, but a safer and interaction can take place.
Compliant DeFi,
yeah.
non-compliant DeFi.
Yeah.
And then
that will help for sure.
Yeah. Then you get into sanction compliant DeFi, and then it's a spiraling. It can go awry. So we definitely need all players to opine on how to keep DeFi.
It also drives innovation when you think about it, because for these privacy rights, I wouldn't think. I don't think we read anything about zero knowledge proof transactions 2.5 years ago, and now they could technically become a standard if this KYC wave takes off and is actually taking over networks. Then we could perfectly have zero-knowledge proof transaction becoming a standard of the industry in a couple of years. So I think it also drives innovation because people will want to fight for their privacy rights. And at the core of this, let's say, industry is still this aspiration to decentralization that, well, that will still have to be taken into account, even on the long run.
Absolutely, well said. On that note, I'm just going to open up the floor. We have 10 minutes left, I believe, yeah, to questions. Is there, yeah, there's a mic. Yeah.
Hey, centralized exchanges, unlike decentralized, serve many purposes. They are broker, dealer, custodian, sometimes market maker, as in they are the whole stack, as opposed to centralized exchanges in the stock market and other markets, right? DEXs are very different. I think DEXs really offer the swap, right? So how do you see that changing? Do you think that your exchanges will continue to offer full stack, or as more regulations come in, you will be required to, you know, have other entities do some part of that?
I can try to answer if you want, and maybe you can add on top.
Sure.
Well, regarding decentralized exchanges, first they started implementing more of these services that you mentioned, especially automated market makers, this kind of things we have seen. Also, we have seen some moves from traditional DEXs towards more centralized solution when they want to go into derivatives, for example. I don't know if you've heard of the latest development for 1inch. And you have DYDX also that is providing derivatives in a decentralized way. So once again, I think this hybridation is already taking place. In fact, we are just witnessing it and witnessing the new equilibriums that are rising. Probably you're right about the fact that since it will bring more players in the industry, we will have more third parties to look at and more potential partners to look at when we want to provide more and more services. So yes, and we will actually be glad to take advantage and continue to improve the service whenever we can.
At least let me share my experience for Thailand to answer your question. You're right, centralized exchanges, we deliver many of the critical components. And if you were to compare this to the previous generation of the traditional stock exchange, where they are having many of their components operated by different players, we are more efficient, we're more effective. That's why we allow 24/7 trading and T+0 settlement time, right? But for Thailand, at least, things are about to change. We are being unbundled, right? We are being unbundled. But the keyword here for which part would be unbundled is the conflict of interest. They're just like really the core. Not, I mean, they obviously efficiency-wise is good. Effectiveness is good, but really we have to differentiate between what is a nice to have, what is a must have. In terms of the regulator's eye, we need to at least meet all the must-have requirements. And one of the must-have requirements as an operator, right, a legal operator, is to remove all the potential conflict of interest. Right? So, for example, the custodian solution part, we cannot operate this anymore in Thailand. We have to have a separate entity, not related to any of the holding or the shareholders, nothing related to the exchange operator, to play that component. And I foresee, so long as if it keeps bothering the regulators on this conflict of interest part, then it's going to keep being unbundled. But those other components that are not really, bothering on the conflict of interest, I think we will still be playing that efficiency role. And also to answer your previous question about the flexibility of institutional investors that they are really asking for. Again, I think we have to separate the word a must-have and a nice-to-have. Flexibility, liquidity is, of course, it's nice to have. But for institutional money to enter the space, we have to meet all the prerequisites. right? The must-have first,
Yeah.
which is like legality, like what you've been stressing, like saying all along, like legality, approval, license, right? Even if you have the best features, the best liquidity, the best flexibility in the world, if you don't meet the prerequisites or the must-have requirements, then real money cannot enter the space. So we have to solve, on legality aspect and also on the security aspect, because institutional players, they're investing money on behalf of someone else's. So they have to make sure that they invest in something legit and legal, and they can have a place that they can keep their customers' money safe.
Yeah. So people are gonna, this new space is gonna understand, why banks are as they are, with time, why we are slow, why we are cumbersome, why we ask always many questions.
Not too
because in order to open the door, basically you need a lot of things. Technology is very good. Technology as it is now is basically a front to back instantaneous operation, but that's not how the real world really works. And unbundling, that's what's going to happen. Here in Europe, we have a regulation called MiFID II. Now let's say they're working on MiFID III, which basically deals in a specific 200 pages document, deals with conflict of interest and how you need to separate different operations, different sides of the banks. They need to be, not even, internally, they need to be structured as internal legal entities, and some of the product. And if you do one thing as a business, you cannot do the other thing, even though you separate or whatever. Is basically what you're saying. Custody. If you're a custodian, you cannot be a market maker or a trader or whatever. It's something that for sure is going to happen because otherwise, the risk of the conflict of interest is totally real and possible.
It's not a risk. We've seen it.
Yeah, well, we've seen it. With FTX, not even a year ago, still reverberating across. So definitely, you guys are gonna learn, why banks are where, it's like, and that part, I'm sorry, it's gonna be very boring. It's very boring and cumbersome, but it has to be done. If institutional money or wider adoption has to come to the space.
Don't look at me. I'm stock exchange compliance. I understand you. I'm on your side. Great question. Next.
Maybe that's a good next step for a question. Also, you have your structured product that you've launched with the underlying Bitcoin. So when are you going to tokenize it, and when we will see it like on the exchanges here being traded by the masses? So asking about security tokens and the future of them. What do you think about centralized exchanges then being the place to trade it?
Well, it could be the centralized exchanges, it could be the banks, it could be other type of structure. Under the pilot regime, under the ESMA regulator, there are many projects, very interesting projects. One of them with 6 and the Spanish market, VME, which basically is about building the next phase of a traditional exchange, which will be, a traditional exchange which is able to support tokenized assets, and especially real-world assets. And this project in particular is focusing on real estate tokenization projects, okay? So this innovation is coming. Incumbent players like the stock, like SIX in this case, which is one of the main exchanges in Europe, they are already working in this type of projects. We're actually collaborating in this particular project with the Spanish stock exchange. So yes, it could happen on the exchanges. It could happen on traditional exchanges which are allowing, or which are basically implementing this new technology. And at the end of the day, what we want to avoid, or what we want to have as much as possible, is that the user experience of the traditional client doesn't change that as much. The same way you trade stock, regular stock on your banking platform, one day you will have another screen or another side of the thing of the app, which will allow you to basically trade Bitcoin or trade a tokenized asset, or basically, let's say, specifically like as an asset class, within the real world assets, tokenizing real estate assets, because everybody understands the underlying. All of us know real estate, because at the end of the day we need a roof under our heads. Okay, so over our heads. Sorry. So it is very easy, to understand that asset, and that's going to come very quickly. And it's going to be basically institutions, players that are going to push for that. There are many projects working into that direction. So yeah, for instance, and tokenize, stocks as we know them, tokenize funds, but especially the infrastructure. Okay, nowadays, for instance, if you're a private banking client or whatever, or retail client that has a portfolio of investment funds, and for whatever reason you want to move to another bank because they give you better offer or whatever, transfer your portfolio of funds from one institution to the other. It could take 30 days, more or less, or 20, 30, depending on the institution. That's totally unacceptable. What if we tokenize that back office process and you can move your funds from one day to the next? That's already being worked on, and that's going to happen very soon. And that's where institutions really see the value of this new technology, because it's going to save huge loads of cost for us. And that money can be deployed on further innovation in some of the parts of the business. But one of the main, let's say, aspects or sense of this technology for banks is to save money on processes. It's a game changer.
Overall, if we are talking about real-world assets, they actually make a strong case for centralized platforms overall, traditional or crypto native, because DeFi protocols are pretty bad at warranting value outside of on-chain. And then you have an asset that actually exists in the real world, and at some point somebody has to put some kind of authority or anything to make it real, make it happen.
Yeah. You need the custody of the real thing and the custody of the digital thing. So you need both things.
I think I can chime in a little bit on this. While I am not very sure about the compliance issue and the regulatory framework, how will it be for real-world asset worldwide in different markets? But as we have so many decision makers here, I would like to see as like a Web3 provider providing this back-end service to tokenize the market, so that we have like the efficiency and the foundation of making it truly Web3. It's not like Web 2.5.
Yeah, that's a good point. I think that's the benefit of forums like this is to raise the awareness and to foster that innovation and the networks that make it happen.
You talked about risk management, and my question is, are you required by regulators to maintain some cybersecurity compliance programs like ISO 27001, maybe NIST, PCI DSS, OSPRA for Asia, SOC 2, SOC 1?
For us,
for the, in banks, basically, we are subject to all these regulations. And basically, we need to basically to reinforce. Once we go into digital assets space, obviously we need to review all our processes and reinforce with best-in-class processes in terms of cybersecurity. Basically, as I said before, we cannot really afford to fail in not on this traditional space and not on the digital asset space. So,
I mean exchanges, especially DeFi.
Yeah, so we are SOC 2, same banking grade now, right? Even the third-party apps that we're using, we're only allowed to use the SOC 2 verified ones. I'm not sure for the rest, but for Bitkub, we're SOC 2.
We try to implement, I think, standout of the industries. Now there are standout of the industries in terms of cyber threats. And we also do, I know that, for example, at KuCoin, we do a contest for hackers to try to come and hack the platform. The price is 1 million. So please be our guest. Help us make it better.
Great. Any more questions? One more? We have time for one more question, yeah?
Thank you. So 2024, in my opinion, will be the year of the regulation, as we just discussed together. One question maybe to Dorian and Rachel, that they are acting also in Europe as markets. What is your current stage of adoption of MiCA regulation, that we know that at the end of the year will be totally enforced for the providers of crypto asset services, and it's a quite impactful regulation on your business?
Maybe I can share a little bit. So Bitget is registered as a virtual asset service provider in Poland and Lithuania currently. And we are working very hard to embrace the MiCA framework. While I cannot really share like the details of it because there are lots of complications involved, but we are prepared to welcome the new framework. And as far as I know, there might be differences in different markets, even within Europe itself. So our compliance team has doubled actually last year to at least 50 people working round the clock and also working with different partners to achieve that.
Yeah, I would say very fast because I see what we're running out of time. So one thing with MiCA to understand is that the same thing, we have local regulations in local countries, but as you mentioned, it's not going to fly that way anymore. It's really going to be a regulatory framework that applies to the whole of the EU. Therefore, the thing to understand is that there is more than one way to get to it. And because of that, it's a strategic decision. And that's why we cannot really disclose everything in front of you, because the way we're going to MiCA is also part of a strategic decision of the exchange. So like on this, like please be assured that we are working around the clock, as she mentioned, to make it happen by the end of this year. But the truth is we cannot be so much more precise than that.